Hello, everybody, and welcome to the IC Markets Technical Update for the week of June 29th. My name is Toby Gennaro from Trade the Precision, and just going to take a look at some of the charts here for the S&P 500 index. I know a lot of people have been following this, and we've just kind of recently come to a recent precipice on whether the recent rally is going to be sold off, and so I wanted to talk about that a little bit. And so I wanted to start out here on some of the higher time frames, the monthly and the weekly, give you a picture of what I'm seeing and see if that resonates with you. From right here, we've had quite a bit of pullback off of that 4,800. We're down about 1,000 points on the S&P roughly, and we've pulled back almost into this 61.8% Fibonacci retracement. Currently, we're hanging right around the 38%. I believe in looking at the charts, I'll kind of show you my analysis here, but I think we're due for maybe a little bit more of a pullback, at least into this area around 3,200 to 3,500 on the S&P before we get any type of a sustained rally or a significant bounce of any kind. For the most part, these have just been very shallow bounces as we've been making our way, down through some of the levels of support. So what I did was I put in a Fibonacci retracement from the low here, which was represented by March of 2020 when the pandemic hit and we had that big run up. And now we've almost retraced almost about half of that. And so I want to take a look at that. But that's kind of what the monthly chart looks like. I don't know that there's any other better place to put that Fibonacci retracement other than here. There are some higher levels on the weekly chart that we could look at, but I kind of like that positioning right there. And then as we look at the weekly chart, kind of move this over here real quick. The weekly chart, I've got a Fibonacci retracement from the most recent swing high to the most recent swing low. I'll show you this on the daily chart and what that looks like. But we basically did a retracement right back up into that sweet spot of around 50 to 61%, right around 3,900 thereabouts, and then have rejected that for now. And I think that supports my hypothesis here of a little bit more downside to that 3,500 level and looking for a deeper retracement in terms of a market correction, or if in fact, there's going to be some type of a recession coming in the next 6 to 9 months, and then that would be in line also. So in looking at this, you can see that we've rolled over. We had a lot of divergence here at the high of 48. The markets kept pressing higher. The indicators started to put in several legs of divergence across multiple time frames. That usually tells us that the trend overall is weakening. And as you can see, that was a pretty strong trend. So it takes divergence across multiple time frames before traders start looking at that as any technical significance. And so once we put in some lower highs and then lower lows and then lower high and then a lower no, we pretty much have a full downtrend here with the 50, the 20, and the 10 period moving average all in alignment, fanning out to the downside. And as we get this rally right back in and around that sell zone, coupled with that Fibonacci retracement sweet spot of 50 to 61%, once we start setting up a bearish candle, usually that indicates there's more than likely some downside for that. So right down here, we have on the MACD and the RSI, we're looking at that convergence now to the downside. We had divergence here. The trend has rolled over, and now we are putting in lower lows along with the lower lows in price. So as soon as we start putting in lower lows in price and higher lows on the indicators, then that would signify that the downtrend is weakening. So up until this point, we don't see that yet in the charts. And so, my bet is going to be to the downside. Let's take a look at the daily chart right here. And I'll leave up the monthly chart just to give you a reference point. But here's that Fibonacci retracement that I was talking about drew that down from the most recent swing high to the most recent swing low. You saw that rally right back into the 50, 61%, set up a pretty nice indecisive candle, which kind of always suggests turning points in the price action, and then sellers stepped in and they're continuing to sell this off. So I would expect a retest of at least the 36 level, if not getting us all the way back down into these levels right here. So that's kind of what that looks like. As you can see here, slight divergence with the lower low right here, but not as much to have any real effect, I think, on the price action. And so, in looking at this, I think if we continue down, retest the 36 level, potentially break through that, I think we'll see potentially the markets continue to converge with the indicators to the downside, both the MACD as well as the RSI, and then that would give us more strength to the downtrend. So, and then again, this a lot of this stuff is going to be news driven. So in looking at some of the news, there are layoffs, there are some bankruptcies happening. Uh, CEOs are already talking about an impending recession and cutting costs. Hiring that was initially planned more than likely is being suspended, and so those are kind of all of the fundamental signs of a recessionary economy beginning to set in, and the market is just really predicting that 6 to 9 months in advance. And so all of that is kind of part of my prediction here and assessment technically in looking at why the markets are turning at this point. We can see, I believe, where this has happened previously in this level right here. I'll just draw this in to that level, and that should put us somewhere back close to a retracement right around in that 50 to 61% zone. So it has been working pretty consistently within this trend going to the downside. And so I believe it's going to continue to work this time around, and we're going to get more downside in the market. So hope that technical analysis helps on the S&P 500. Have a great rest of the week trading, and we'll look forward to talking to you next time. Take care.